Yeah, we happen to have a budget happening, who'd know, with that extraordinary story. But Sky News can reveal that the government will extend the low to middle income tax offset, giving those on lower incomes more money when they put in their tax return, allowing them to redirect that into the economy as we attempt to fight our way out of this COVID recession. We know that the government is bringing forward its 2022-23 tax cuts. The speculation is to July, which will see between $255 per year and $2,565 per year go to all Australian workers. This table spells out those tax cuts. Well, the low and middle income tax offset sees those on $37,000 or less get a refund of $445 on getting their tax return, and those between $37,000 and $126,000 get between $255 and $1,080 per year. We can expect in Tuesday's budget an extension of that, with perhaps the threshold being increased, and also an extension past the end date of 2021-22 on the table. The idea is to put more cash in the pockets of Australians, with the hope being they spend, not save, that money to stimulate the economy. We have already revealed that JobKeeper, according to the budget papers, is coming off in March. You would expect that to be replaced by what the PM calls an aggregate demand measure after that, which will involve this tax offset plus perhaps cash payments to pensioners and the like. But the government will be keen to have more of those aggregate demand measures in July as opposed to March, with this year's budget deficit already expected to be $200 billion thanks to JobKeeper. The Prime Minister keeps pointing out that a lot of the stimulus is temporary. There is good reason for this. It means that it does not cause a structural problem in the budget, and you end up with one massive deficit compared to a bunch of them. Here is what we know about the budget so far. 2 days out, JobKeeper to finish in March, a new jobs payment to replace it if you hire someone, income tax cuts brought forward, first home loan deposit scheme extended as we revealed the other day, greater tax offset, likely cash payments for pensioners and others, greater spending on infrastructure with speculation of a use it or lose it condition on the states to get that money out the door quickly, and the ability for businesses to claim their losses against previous profits. There's also an exemption from FBT on providing parking spaces for companies with turnover of $10 to $50 million. This has not gone far enough for the parking industry, who argue to get those ghost town CBDs going again, you need to extend it to big business as well.